Let's get you updated on our ag commodity trade, and we're going to welcome help from Brian Hoops of Midwest Market Solutions, and he is based in Springfield, Missouri, where I understand, Brian, things are going to kind of heat up here the next couple of days once again in the Plains area. Is that making people nervous at all if the heat starts to return again?
Well, it's certainly going to be a supportive feature to the cattle market, I think, in the Plains areas. It'll help our winter wheat harvest out quite a bit if we get some warmer temperatures again. We don't want the humidity that comes with the warm temperatures, but it's pretty moderate this week, so I don't think there's any real concerns in the Plains about the additional heat that we are forecast to see by later this week.
The corn is just moderately weaker here. It had been holding its own roughly on the open this morning, and then it kind of slid away from that a little bit. Let's take a look at where the corn is trading right now. And on that September contract on the corn, we've been generally showing a tone about a penny or two weaker here this morning. It's down, about 2 3/4 here at 420. We'll take a look at the soybean trade as well. Soybeans have had a very soft session here so far. Generally about 2 to 4 cents lower for the most part here this morning. September down about 2.5. Let's take a look at the wheat trade. And in Chicago, we have it trading anywhere from 1 to 2 lower for the most part. September down a penny at 485. Kansas City is very similar today. It has had some fractional weakness at times, so it's just bouncing around either side of unchanged. Let's take a look at what's going on with the markets in general from your perspective here, Brian. We had those new crop condition updates that came out yesterday from USDA. How do you think the trade is actually handling this overall in the bigger picture of things?
Well, overall, it seems to be ignoring the crop condition numbers for the most part, focusing on some weather concerns or weather direction for prices in here. There's forecasts on Friday talked maybe about a hotter and drier trend returning, but that has since dissipated, and we've pulled markets back off of highs that we saw on Friday. And, we get into the month of August, we could see hot and drier trends again. That'll be another impact on the market. But like for corn trade, since late May, we've traded in a very broad range, around 425 on the bottom side, which is what we touched this morning, all the way up to 465. And right now, some of the funds are starting to liquidate some long positions because of lack of momentum and lack that the market is not making new highs. And offsetting that is some end user type buying around this below 430 area. That's what's supporting the futures in here. So we're really not going anywhere too fast at this point in time. The soybean market continues to hold that uptrend line, or the short-term uptrend line that it found last week. It bounced off of it again this morning, as there is that prospects for the month of August to be much hotter and drier than what was thought just a few days ago.
Oh boy, it could be an interesting time of the year, and a lot of important stuff going on then, pod filling and all sorts of stuff. Brian, we'll come back in a moment, and we'll talk about what's going on in cattle and hog trade today on a Tuesday as well. We're talking with Brian Hoops, and we'll be right back. We're talking with Brian Hoops of Midwest Market Solutions right now. And Brian, as we change our focus here and take a look now at our cattle market, let's go ahead and dive into our prices. And on live cattle trade here so far today, we have had a firmer tone going on. And right now you have that October contract currently trading about 32 cents higher. We're at 109.47. And December is up 17 at 113.97 right now. And we have that February contract up just a dime. Interesting, as you go further out in the calendar, the gains get less and less until you get to April, where it's not even changed from yesterday. Now, on the feeder cattle side, after the move upward yesterday, we have been retreating. And September feeders currently down 63 at 141.80. October down 53 cents now at 142.13. Does that alarm you at all in this market action on the feeders?
Not really. We had such a strong rally yesterday that we're giving back just a small portion of it today on some profit taking. It did not take out the highs from earlier this month, and that could be why we're seeing a little profit taking on those feeders. But, overall, the longer term fundamentals are still, I think, positive. You've got the heat that we talked about earlier moving into the plains. That should be positive for the cattle market overall. You had the cattle on feed report showing placement numbers down from year ago levels, and that's a longer term supportive feature. And that cold storage report that came out certainly looks positive with the big drawdown in beef stocks, not only for the month, but year over year.
So why the divergence, though, between the live cattle and feeders today?
Yeah, you may see some spreading between the two contracts. The feeders have kind of been the upside leader, and you may just see some profit taking off of that spread trade today. And so, I don't know that it's a major component of the trade today, but it does look like we're seeing a lot of profit taking. The feeder market could be anticipating the corn may try and find some sort of a bottom here and rally into the end of the day as well.
Now, lean hogs have been firming up today, and let's take a look at what they are currently doing. So far on the lean hog market, we have the October contract up $1.33 at $80.53. So we're over $1 off of our earlier low now in the October lean hogs. And we have the December up $1.42 at $78.45. I know we have been rolling positions out of August into the further out contracts. How far along are we in that process now?
Yeah, we're going to continue to see that spreading out of the August into October and December contracts. And this is a market that last week had closed above a downtrend line and then gapped above it the next day. And we just continue to see short covering going on here. We're definitely technically overbought, but with the funds holding a big short position and likely on the wrong side of things, they're buying their way back out of that. And that's given us some strong rallies, especially in those deferred contracts. Likely to see some more additional exports to China in the third and fourth quarters of this year. And so that holds kind of a bullish sentiment for the hog market as we try and retrace some of the losses that we've seen in April, May, June of this year.
Thanks, Brian. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, with a look at our livestock trade as it stands right now. Going all directions here, Christina.